How's it going, guys? Welcome back to another video. In today's video I'm going to go through how I see supply and demand zones and how I choose the most high probable supply and demand zones for me to trade out of. So as you can see here, I've got a couple of diagrams on the screen and I've got a little bit of text on the right hand side here, so it's just things I look for. So first of all, I will just go through this, and supply and demand doesn't have to be complicated. I see a lot of people making trading a lot more complicated than it needs to be. What you need to do is you simply need to make trading as simple as possible. If you've got a million different things that you like to see in supply and demand zones, the chances are by the time a trade's come, you've probably not even picked out the right zone and the trade's been and gone. And you just want to keep it as simple as possible. So specific things that I look out for will be these here. So have we broken structure? So at least we need to have broken structure with our supply and demand zone. And as it previously mitigated the zone, so if we've previously mitigated a zone, what's this showing is it's showing that order flow is present within the market. If it's previously mitigated a zone, so let's just say for a moment here we've got some zone over here that we've come back up to and mitigated, and we've come down. As you can see, what this will do is it will show that order flow is present within the market, and then obviously the likelihood is that we've created a supply chain in this case, and then the likelihood is that we're going to react or get some sort of reaction from this zone right here. And the next one I look for is, have we got imbalance? So all imbalance is it's showing us that smart money is present and buyers and sellers are present within the market. Us as retail traders, we cannot move the market. All we are doing is trying to follow a footprint of smart money and get involved within the trades that we are currently looking for. And these are three things that are very important to me when it comes to supply and demand zones. You don't need to have all of these. What I would say is I would look for definitely a break of structure, and I also pretty much all of the time look for an imbalance in the market as well. A previously mitigated zone hasn't got to be, it's not necessary to have this at all times, but it's something that you can look out for, and it's something that gives added probability and added confluence. So moving on to the diagrams now, what you will notice is here we have a range. So what you might see is you might see some sort of consolidation, and then you might see an expansive move to the downside, obviously creating this imbalance that we talked about over here, showing us that sellers are entering the market, which means that this zone then will become an high probability zone that we might get a reaction from. Over this side we've got more of a pivot. So what you could do with a range created supply is if this is all sort of messy and it's all like this, what you can do is you can go up to an higher time frame to try and clear this up, try and clean it up a little bit, and just choose one buy to sell candle in order to mark out. But then obviously on the lower time frame, if we've got a clean buy to sell candle right here, this would be our pivot created supply zone, and that obviously also would lead to a break of structure. Maybe it's got imbalance, maybe it's previously mitigated something, and then obviously we're looking for a reaction from here, a lower time frame confirmation maybe, or even just a confirmation on the time frame that you are looking at. So what this kind of is known as well, you might see some videos on YouTube, you might see a drop, a base, a drop, you might see a rally, base, rally, you might see a rally, base, drop. Some people call this a base, so that's what it can also be known of. So if you obviously hear that term, this is basically what they are referring to. So it's just really simple, guys. If I go over and show you a couple of examples. So on the first example here, we've got sort of a consolidation, a range created demand zone. As you can see, what has happened is price has been stuck in sort of this sort of area, and obviously we're on the 15-minute chart here. So for a couple of hours it's been ranging around in this area. Then what's happened is we've had an expansive move to the upside. It's showing us that buyers are present within the market, and eventually what's happened is price has returned, tapped in, we've got a nice reaction here, and price has continued to the upside. So this would obviously fit all our criteria. It's sort of mitigated maybe this zone down here. Not the clearest zone, because I do like to see a clear buy to sell candle, but you could mark out this wick if you wanted to refine sort of this big candle right here. But obviously it's previously mitigated something within this wick. It's broken structure, so it's broken this structure. It's even broken this structure up to the upside right here. What's happened then is obviously imbalance is coming to the market, showing us that buyers are present, smart money is present. It's come back, tapped in, gone. Moving on to the next example here is, it's kind of a different example, because what happens is we do get a tap in to the supply zone, we do get a little reaction, then what happens is we just consolidate for, quite a long time here, and then eventually this zone does get swept. So obviously supply and demand doesn't work 100% of the time. Nothing ever works 100% of the time in trading. You're going to take losses, and sometimes supply and demand zones will fail. But if you could have got involved in a trade right here, maybe you could have got 2, 3, 4, maybe 5 hours out of this trade. You could have been, in and out of the market within this leg of price right here. But if you're targeting sort of, maybe this week low down here, the likelihood is you'll be swept out of your position, and you maybe stopped out at break even. But again, this is a range created supply zone. You see price contained within this sort of area right here, and then we see price take off to the downside, creating imbalance. There's imbalance all the way down this leg here, showing us that smart money is present, and smart money and the sellers are wanting to go down. Obviously price then later returns. Could have got a trade, like I said, from here. Later on we've been swept out of the position, but like I said, obviously stuff is not going to work 100% of the time. So moving on to the next example right here, we've got sort of this area. As you can see, what we've done is we've come down, we've broken all this structure to the downside. So broken this, broken this, broken this, and obviously we have got imbalance. It's previously mitigated sort of this supply zone right here, and then what's happened is we've come back, tapped in, got a trade to the downside, and we could have been in and out of the market, and took some nice profits between this sort of leg of price right here. The next example right here, as you can see, we've got sort of a supply chain. This is an example of when we have previously mitigated something. So obviously what's happened on the overall picture is, if I just zoom out a little bit actually, what we've done is we've broken structure to the downside right here, and we're contained between this swing. What's happened then is obviously we've put in a complex pullback right here, and then price has shifted to the downside. So if you were trading this sort of leg of price right here in between this swing, obviously you could then, once we get our shift to the downside right here, breaking this structure, you've got confidence then that price might be coming down to take out this weak swing low. So what you could do then is obviously get involved in this supply area right here in this trade. So you could get involved in this first trade right here. As you can see, we break structure. So we break this structure, we've got imbalance. It's not previously mitigated something, but I do think it actually did sweep this high right here, which has added confluence as well. It's taken liquidity from above this high, and then it's broken to the downside, returned and gone. You could have got a nice trade. There's serious pips here. If we just go ahead and measure this, if you got obviously into a trade right here, there's 50 pips to take advantage of within just this one leg of price right here. And then the next supply zone, as you can see, it has previously mitigated something. It is a clean buy to sell candle. So we've got a buy to sell, break structure, there's imbalance present within the market, and also it's previously mitigated this area right here, showing us that order flow is present. It's come down, it's come back up to our zone, and again it's then come to the downside, it's broken this structure, and ultimately it's taken out this weak 15-minute swing low down here. So that's all there is to supply and demand, guys. Go on your charts, practice this, and if you just use those 3 criterias, or just the break of structure and also the imbalance, a lot of the time when we do get imbalance and we've broken structure, a lot of the time you will see a reaction. Whether it follows through and takes out any major structure or not is remain to be seen. And if they don't always work, they're not 100%. They sometimes will get swept, they sometimes will fail, and price might just continue sort of to the upside. But a lot of the time, if you've got those criterias, they will work and you will get some sort of reaction. So what I'd recommend is obviously going on your charts, testing this out yourself, and that's pretty much it for supply and demand. There's not really much to the concept. It's not a complex concept at all. It's one that you can pick up pretty easily, and it's very, very simple to learn. So yeah, that's pretty much it. If this video did help you out, guys, I would appreciate it if you could drop a like on today's video. If you have any questions, feel free to drop them in the comment section down below. And without further ado, guys, thank you very much for watching, and I will see you in the next one.